Welcome back to your 5-minute Seattle Real Estate Monthly Update. In this channel, we cover everything you need to know as a property owner or investor in the greater Seattle area. Please subscribe and follow us so you can receive our 1-minute weekly updates as well. So major shift is happening in the real estate market as we speak. The Fed just raised the federal fund rate by another 75 basis points. And they are scheduled to increase the rates 4 more times throughout the rest of the year, which means we may reach 3.5 to 4% federal fund rate by the end of 2022. How did the market respond? Interest rate for a 30-year mortgage jumped to slightly above 6%. As we can recall from our last video, interest rate was hovering right around 5% last month. So over merely around a month, we have nearly 1 full percentage increase in rates. To put that in perspective, for a $500,000 mortgage, we're talking about more than $300 increase in payments every single month. In terms of real estate, the rapid increase in cost has already priced some potential home buyers out of the market. Mortgage applications for home purchases in June were down more than 15% compared to the same time last year. So what is the impact on the Seattle real estate market? Let's take a look together. The median price single-family home in King County just reached $1 million. And compared to a year ago, this is roughly an increase of 14.3%. For the properties that were sold, they were on the market for about 5 days on average. This number had stayed the same for the past 4 months. For the properties that were sold last month, they were closing at right around 5.9% above the asking price. Compared to last month, sellers were getting about 11.6% above asking. So sellers are getting less money for their properties due to less competition and price escalation. In total, we had 2,187 homes available for sale in King County. Compared to a month ago, we have 484 more homes available for sale, which is great news for home buyers. Also, compared to the same time last year, we had a huge increase in inventory by 62.1%, which is one of the biggest jump in inventory we have seen in recent years. As we're entering into the summer months, more sellers are putting their homes on the market in an attempt to capture what is remaining of the feeding frenzy. When we compare how many homes are currently on the market for sale to how many homes that were closing, we have roughly 0.9 months of supply. As the balanced market is between 4 to 6 months, we're definitely still in a seller's market. However, as we mentioned earlier, the data is showing that buyers are facing less competition and sellers are receiving less in price escalation. So what does that mean to home buyers and property owners today? If you're planning to sell your properties, here are my top 3 tips. 1. Adjust your expectations. If your strategy is to price low and counting on buyers to bid up the price to where you want to be, this approach, which was working for a lot of sellers before, is likely to backfire on you. 2. Focus your pricing strategy to your current competition or pending sales. In a normal market, you can generally use sales data of comparable properties from within the past 6 months. But in this market, do not use comparable properties sales data from more than 2 months ago. Better yet, ask your real estate broker to contact the pending transactions in your neighborhood to get the most updated pricing guidance. 3. Be objective. Try to see your property as a product and see things through the lens of a buyer. Tour your competitions that are currently available for sale so you can accurately assess the optimal market price for what your property has to offer. For buyers, as the interest rate stabilizes and sellers' concern for potential recession looms, there may be opportunities for you to pick up deals as you face less competition. More importantly, you should be able to have more choices as more housing inventory enters the market. However, be proactive and diligent on controlling your costs. If you require a loan, the benefit of less competition and price escalation is dampened by the rising cost of financing. So secure as good of an interest rate as possible and make sure you position yourself to be able to hold on to the property for the long term if needed. As always, thank you so much for watching and I hope you find the information helpful. Please subscribe or like this video. I'll see you next time.